15. So Joe's overweight the space.
Yeah.
You're like really overweight.
Very.
You're 15% of the book.
Yeah. Yeah. Well, and here's the thing. I mean, last year we were 15 to 20% and started taking it down in the early part of the year. We loaded back in May. I mean, look at a lot of this stuff has done really well since May. So this pullback, and to Joe's point, the expiration of the December contract. December, and when you get to futures, talk about futures trading, December is a big month, not only for crude oil, but a lot of the futures. So yesterday was the options expiration, and so a lot of options, especially institutions that are hedging and producers that are hedging, may go out to December contracts. When this thing was rolling off the board yesterday, it creates a sort of a pocket, and there was an air pocket. The market started breaking new lows. You already had a lot of institutions dumping exposure in oil after some of the war premium was coming out. We hit an air pocket. It's no surprise to see it bounce a bit here today. I think, though, that crude's going to continue to trade fairly well, and then I think we could chop around a bit and improve. The thing about it is, as Joe pointed to, the OPEC Plus meeting coming around the corner. You have Brent, basically the world staple for oil, is below 80. OPEC Plus can really start to jawbone a little bit on that. On top of that, JP Morgan said earlier this week they wouldn't be surprised to see more production constraints from OPEC, so I think it's another. And then China, they're destocking. I think China is really going to ramp up imports first quarter this year. So I love the names that we have.
I think it would be interesting, too, if President Biden's administration begins to